right, everyone. Welcome to our first live session for 2022. We're excited to be here. Volatility is high, Tyrone. We've got the VIX going crazy. We've got interest rates seemingly out of control, and everybody's coming out with outlandish discussion points. Jamie Dimon, I can't believe 7 rate hikes in 2022, he claims. What do you think about that?
It's bloody ridiculous. Well, welcome everybody to 2022 and our live webinars. We have been itching to actually start and get back into the groove of things. I think we're going to have a very, very exciting year, and the movements are already starting to get us a little bit excited. So cannot wait to get into it. Thank you for all of your kind words of support throughout the holiday period. I know a lot of you have missed us, which is an amazing thing. So we really appreciate everybody sticking around, and we're looking forward to getting into it.
Absolutely. So let's get into it without further ado, and we'll bring up the discussion point, I guess, that most people have at the moment, which is going to be yields. Now, they're pricing in on the 2-year here 1.063%. So basically, it just continuously ramps up and up and up. And at this stage, we've got kind of the Fed down here, and they're kind of playing catch up. They're trying to chase the bond market, you would think. But like any good market, it tends to emphasize a problem. So we've got the US 10-year, I think, sitting around almost getting close on that 2% kind of area, 1.89. We've got the US 2-year sitting at 1.06. Will they really come to fruition? I think the Fed will have a harder time raising rates more than 2 or 3 times this year. That's at least my personal prediction. I may be completely wrong. Maybe Jamie's correct. Tyrone, how many rates hikes do you think they'll get through in 2022? 2. Okay.
Yeah.
So we've got 2, and I'll go with 3 then, just to be a little bit different. So we'll go with 3. and 3 is probably a little bit extreme, really, when you think about it. Shipping is going to be the big thing that you should be watching in 2022. If shipping starts to alleviate, and of course those congestion points that we've seen really rise and or continue to be the big problem behind inflation improve, then we could be looking at good times. So without further ado, let's get into a little bit of currency discussion with the DXY. We'll get into commodities, then we'll talk about indices, stocks, and of course, crypto. And we'll start here with the DXY. So I guess our prediction or our concept is that the dollar index may be strong over the longer term, but because the VIX is above 20 right now, we need to be nimble and fast in the FX world. And it's going to probably be a scalper and day trader market for the next couple of weeks, isn't it, Ty?
Yeah, most definitely. And look, when you look at that on a weekly chart, I mean, the dollar index on a weekly chart is in a dead set uptrend. There's no question about that. Series of higher highs, higher lows, still going, sitting on the 200 moving average, which is a no-nonsense moving average on a weekly chart. So realistically, although it's looked a little bit soft on some of the smaller time frames, in reality, it's actually looking really long. So from a yearly standpoint, I agree. I think that, given all of the chatter around about the interest rises and everything else, I think you could probably be expecting this is going to be, in the hundreds at some point throughout 2022. That's what I'd be expecting. At the very, very least, it'd be breaking up to a new high above 97, 98. And starting to test that 100 level again. I could certainly see that happening sometime this year. And it could happen, quicker than people think, actually.
This idea of inflation, while happening all over the world, is happening to different degrees in different countries as well. So we need to remember central banks are going to be playing this yo-yo effect of we want to stimulate the economy and make sure we get our jobless numbers to the right levels, unemployment obviously down. And then at the same time, we also want to make sure that we get this inflation under control. It's a juggling act, and they're going to struggle with that a little bit. But without further ado, of course, with the DXY, what's our opinion on it for the next week? It's going to be a rough time in FX till we get clarity from the Fed. And I think that's why we're going to have to be a little bit careful here until we see the FOMC statement funds rate press conference next Wednesday around 2 to 2:30 p.m. New York time. Once we get further clarity, and the market hates non-clarification of things, we should hopefully see a little bit of trend begin, and we'll get that packing in of price as people move towards what is most likely going to be a March interest rate hike. So we need clarity, and that's really, I think, what Wall Street is looking for, and more importantly, Forex currency traders are looking for. Right now, it seems like the yens are a little bit better here, Ty, to be trading. Maybe the yens are where you should be at, and that's going to be one of the things that we would probably be going with. Do you like any particular currency pairs, or are you more scalp, day trade, yens, that kind of thing?
I think we're scalping. Look, we're well and truly scalping at the moment. I think we're at key levels. We've got bottoms and tops happening everywhere. But I think that's all. That can change very, very quickly, as we know. And we're probably expecting that. I think once these key levels get broken. I mean, to me, I look at the euro and think far out, like it wants to go short. I mean, we'll just go to the euro quickly. And I know we can see. I think we were there a second ago. We'll just quickly go to the euro if you could. When you look at the possibility of where this one's going to go, from a daily standpoint, it's doing basically exactly the opposite of the dollar index, as you would expect. Now, is it? You've got to go out to a weekly to probably really appreciate the longer term trend. I know the daily looks like it's making a bit of a resurgence, but when you look at the weekly, I mean, that just looks like a pullback off, a pretty decent sell off, doesn't it? I mean, it looks, would you be looking at longs with any sort of conviction on this one at the moment? Probably not. It's got to prove itself, and to do that, it has to break above that 200 moving average. No question about that. So, look, if it gets up above that 115 again and starts trading past that level that you've got highlighted there at 115.15 and gets a significant daily close above that, then you say, all right, then we're going to start looking for the long opportunities. But for mine, until it does that, I'm thinking that we're going to see probably a bit more shorting action on this. And I think the next move down is, potentially get us down to that 110 level again. And yes, probably that's going to correlate with obviously the dollar index going up to the 96s and 97s.
Yeah, really depending on, I think a lot of this will probably be predicated by the Fed's statement as well, Ty.
Yeah.
Just giving that clarity, then we'll see the euro and the dollar index really move hard. We've got some nice setups. And as Tyron mentioned, the 115, we breach above that 115 to 117 is a very nice trade.
Yeah,
and
absolutely.
most likely going to be quite good. And of course, underneath this trend line, but particularly underneath the last low, that 110 opens up big support on the higher time frames. Yens as well. We've got things like double bottoms here on the pound yen. We just saw a bit of a breach up in terms of some nice liquidity hunting going on during the London session into the New York session. 156 breach past that could be a little double bottom coming off support, and maybe a follow through here up to 156.60. Check out US dollar again as well. That's going to be a pair of interest. But let's go into some of the commodities, Ty, because I think some of the commodities are getting a little bit interesting. And I'm not sure if I have the stat here. Let me see if I can bring it up for everybody. I will. So let me just bring this up. 1 second here, guys. Let's bring up some gold seasonality here for you. So this is 20 years worth of gold seasonality. And of course, Tyron and I are pretty much on the record going on last year about December being a good time for gold and gold moving up through December. And credit to it, if you bought the 1st of December and sold it at the end, you'll actually be up a little bit. And it did technically hold a bullish gain. But since December, and the reason we start getting into this is partially to do with stats, since that, we go into January and February, and these are historically strong periods of resurgence over the last 20 years for the metals, for silver, for gold. So will this happen again? This is just data. Remember, it's not everything that we're looking at, but it is one of those points where if you bring this together with quality breakouts or quality key technical analysis, it can strengthen our resolve and strengthen our confidence. So silver here, Ty, pretty nice breach past the 23.40. What are your thoughts on this? Do you think this has got a little bit more room to run to the upside?
Yeah, I think it's got 24.50 in its sights, and it's done all of the right price action for it to do that too. Yeah, and could this be a precursor for gold? Well, it can. I mean, one often leads the other, so there is definitely a chance that could happen. But it's done all the right things, and if we get that close above it, a bit of work to do yet, but it could do it, couldn't it? Like at the end of the day, if we get that close today and it looks something like that, I'd be pretty happy with the world. And even if it comes back and retests it after that and comes back and retests that, 23.40 level, with a bit of a lightning bolt off that on a smaller time frame, I think that's still a really good trade because we know that level's important. So there's no worries there.
Yeah, so nice level breakout, maybe a precursor for gold. We'll take a look at in a second. And Crago says here, surely can't see DXY breaking 100 if gold will pump. You've got to remember that's a year-long concept. So we're not saying it's going to happen tomorrow or the next day. We're saying that if we would come back at the end of the year, we believe DXY would be there. Now, that kind of prediction is not one that you're going to trade. It's why would you? I mean, unless you're sitting there as making an investment-based decision. That's more of a belief in an investment-based decision that if you could ride through the storms, you would be up by the end of the year. So just remember, take that with a grain of salt from the action right now. It's not what we're talking about next week. We're talking about a really wide range. So you've got to remember, that's another thing that's a problem with predictions. Sometimes when you read them is someone might say, oh, in 12 months time, let's say JP Morgan believe the S&P 500 is going to be at 5,050. Well, whoop-de-doo. The problem with that is what's it going to do in between? Are we going to go to 4,000 and then go back to 5,050? Are we going to go to 3,600 and then go all the way back? It's that in between that we're really interested in. So a prediction for the end of the year is not going to give us trade opportunities just yet. Silver, my personal opinion on it here is that I thought that breach was really strong. I think to 24 and possibly to 24.50 could be really working out here. And I think that's nice. The other one, the elephant in the room, is going to be, of course, gold. If you still believe in the commodity, which you should at certain key levels, then we're looking at that 1830. And to me, this has just solidified how important this zone is to me, Ty. 1830 is the breach area. Your thoughts?
Oh, well, look, I think gold has done a pretty good job. I mean, look, realistically, towards the latter part of, during December, I mean, we were getting hate mail because gold was down at 1760, and we're like, oh, it's not going. And it hit the point. It hit the 1830. I mean, what it went $50. Like, what do you want people? I don't know what people wanted to do. Yeah,
I want it to be 1950.
and it probably, and you know what, it probably will. Like, if it gets past that zone, that 1830 to 1840 zone, then it's going to give us the signals that it's actually going to push back into the 1900s. But until it actually does that, I still think it's still very tradable. It's not exactly going sideways. I mean, if you look at it at a very, very big time frame, it might be looking sideways, but in reality, it's moving $10, $15 at a time. So I think that, silver is looking, very, very strong, stronger than gold, no question about that. But I think that I agree with you that, if we get that test of the 1830 again, I think it might go this time. It looks like it wants to, doesn't it? Like it's basically bouncing off that trend line that you've got going up. It's having a significant go. It's pulled back to a level that we know is important, which is around that 1810 level. If it bounces off here and starts pushing up above 1830 again, I think it might be go time. And if we get that close above it, then we're going to really see the party start.
Yeah, look, I think I've got alerts. Yeah,
people have been down on gold. I don't know why. Like
it's been a bit crap from a general swing. I mean, look. I mean, I get what you're saying. There are opportunities here, like this one here to here was quite tradable. Then a breach here to 1830 was good, and the buy generally has been there, but it's also not doing its nice dance where it's going on nice big runs. People have got greedy in 2021, Ty. They all get greedy. We all want this type of thing. We all want double bottom, breach. Let's get $200 on the per ounce getting out of here.
Yeah,
we don't
what gold's not doing at the moment is doing really nice setups. It's not doing beautiful technical setups. It's just behaving. It's price action only at the moment. We're not seeing the double bottoms. We're not seeing the patterns. But that's a consequence of it being between two very important zones. And when it eventually breaks out of those zones, that's when you're going to see the retest to those particular levels. And then you'll see a double bottom form potentially at the 1830. And then it'll be happy days. Then we're targeting 1900, 1950.
If you guys, by the way, if you enjoy our sessions, please remember to smash that like button. It does help us with the YouTube algorithm. Is that you clicking it right there, Ty? Click it.
Yep.
The mechanical keyboard. You got it. Good work. He's putting it through. So 1830, one to watch here for gold. Go over to black gold before we answer a couple of questions there and do some FTSE and ASX. I believe we've been asked about both of those. And this has been what a trading asset it's been in 2021 and 2020, 2021 and 2022. It looks to be the asset of choice with TA masterclasses, really. Beautiful bounce. We were all over this one last year. I see a few people, obviously you've been following it up in the Q&A as well, Ty. People have been very excited about this black gold move, and it's continued to show us great technical short into obviously our longer term trend longs. And I'm surprised, but maybe not so surprised, that we bashed through this 85 and now we look for pullbacks back down to the 85 and then of course movements up to the 92. So if we look at this on a weekly, what are your opinions here of the 92 and what's currently going on with black gold?
Yeah, it's looking very, very strong, isn't it? I mean, look, 92 looks like the next target It looks like it wants. It looks like it wants it, and when oil wants it, it generally gets there. I mean, look, we know that as much as there can be technical, obviously supply and demand is a very, very important component of where the oil price goes. Of course, we know this, but at the same time, it does look strong. There's no question about that. I wouldn't mind seeing a test above. Maybe a bit of a retest of the 85 from above. That would be nice. Maybe a double bottom on a smaller time frame. That would be quite exciting. And then I think we've got $5 in it. I think that's potential. 92 is the next level. Like it looks like it wants to go there. So that's what we want to see. A pullback down to that level. The 20 moving average. Happy days. Bang. Look at that. Technical perfection. Bang, bang, bang.
It's been really good. So if
really
Texas good. sweet oil or whatever we've got there, I think it might be Brent that's sweet. Just remember, it is worthwhile watching UK oil and US oil. They offer slightly different technical analysis, and sometimes one precursors the other. So maybe we don't talk about enough on Brent, but it is important to have Brent on there as well, because they trade together, but they sometimes offer slightly different TA, don't they, Ty?
But they're just as technical. They're as technical as each other. So certainly worth playing both games. Jessica asks us to have a look at our national ASX with a love heart. Of course, Jessica, if you're gonna give us a love heart, you're absolutely going to get ASX analysis. Are we going to do UK 100 first? That's cool.
Well, UK came first, Ty. That was the question. Look, the FTSE getting all sorts of news at the moment. The number one all-time breaking, all-time highs, blah, blah, blah. Why is it doing it? The simple answer is sector rotation. And what sectors are those? It's all about value train. So 2021 is spilling into 2022 with the ideas that we've got energy. I mean, Tyron, you and I have seen AGL, Woodside.
I think we need to probably touch on AGL.
We'll have a look.
I know we had people ask us about AGL in December, and it's one we're very excited about. So I think we probably need to have a look.
And we still think there's runway here as well. So we've got energy, we've got finance, and of course we also have the materials. And what is the FTSE? It's basically a triple combo meal deal of that, just like the ASX is as well. Except we have financials, we have all these older school kind of businesses. They're currently being rotated into with strong. I was watching the relative rotation guy today. He calls it strong tails, Ty. It's got strong tailwinds. That's what he said for the sector rotation. It's pretty funny. He's like, it's got a big tail, guys. That's what he said. But look, energy, financials, and of course materials, they're all going gangbusters. We were certainly on that train in 2021, and we've been consistent with the idea that materials are doing well. So FTSE's rebounding when the rest of the markets, e.g. the US market, looks weak. Your thoughts here on the 4-hour, Ty, and what's currently going on?
Yeah, I think, look, at some point it's going to, find the pressure that the other markets are starting to feel. But you're right, this has got that, let's call it the tailwind of the resources. And
long tail.
And look, we've got a question on BHP here as well. We'll probably touch on as well. But yeah, that is certainly driven the 100. There's no question about that. It is a very, very big help to it. Look, at some point, though, this can't keep going in one direction when the other ones are weakening. So I think if we see a significant fall in the SP500 and maybe even the ASX, we'll have a look at that in a second. This one will probably follow suit, but maybe not to the same extent. At this stage, you can only say that it still looks strong. It's not really showing too many signs of weakness. It's sitting on the trend line. It's sitting on the key moving averages and still, for all intents and purposes, printing higher highs and higher lows. And while it's doing that, it would be a very brave person to try and short it, because you're shorting it for really no other reason other than you just think it's going to go short, because there's no technical reason to do so at the moment.
No.
Not that I can see anyway.
It's basically just trying to breach this resistance and make a new all-time high. That's what it's trying to do at this stage. This trend line probably is one of the keys that I would have there, and also a horizontal support resistance through 75.20. That seems to be a big zone. Some resistance, some support. 75.20, currently bullish, as Tyron says. I think we both agree there. Very nice, but be warned, it's all about the rotation at this stage. ASX 200, before we get into the US markets, which code will we use? I guess we'll use the futures. So this market is faring okay as well, but maybe not as nice as the FTSE. Maybe we have a little bit too much technology in here, Ty. I'm going to tell you what, those Afterpay guys, didn't they do well?
Oh, dear Lord.
Perfect time. Well done. If I ever meet them, I will say you guys are literal legends because of that.
Yeah.
Oh man, the Square is feeling the pain of that acquisition. But let's move over here to ASX 200. I'll let you run this one. What do you think?
Sure. Yeah. Okay. So look, we've landed on the level that if it's going to find support, this is where it's going to find support. Look out if it breaks it. Look out if it breaks that 200. If it breaks that 200, 7,200 is definitely in the line of sight. 7,350 is the key zone. I did the Tuesday Market Watch video on it, so you probably all saw that. And technically speaking, we're in that trade because all we needed to do was have the daily close below the 7,350, and we got that. Very clear target. 7,200 is the go zone. But look, it's on the 200 moving average at the moment. I get the feeling that we're going to be very, very reliant on what happens on the S&P at the moment. S&P goes down, we're going to go down, and S&P goes up, we're going to go up. That's just basically how we're going to run, because we're not that close to earning season just yet. We're going to have our own earning season very shortly. Dividends are going to start getting paid. Basically once February kicks in, we'll be having a very different conversation in about 2 or 3 weeks' time. But for now, I think we're going to be very, very reliant on what the S&P 500 does. Again, very, very important zone. The 7,350 is proving to be an extraordinarily important zone. I'm not convinced it's going to hold here. I still can't see. It's going back to a little bit of last year where we say, well, where is the good news? We've got out of control breakouts still. Businesses are on their knees. There's no more government support now. No one's working because they can't get rat tests. Like, the place is just a circus. The country's a circus. So realistically, if you were going to go on the big fundamental overview, like, where's the good news? Why would we go up? It's more likely that we're probably going to see a little bit of weakness. I'm not saying we're going to sell off massively, but realistically, we're being bolstered by an overseas market at the moment. That's the way I see it. We're not seeing the big impact on the stock market yet because a lot of the small business doesn't really correlate to what the big business is doing. But at some point, it's probably going to catch up. During the pandemic, things like Woolworths and Wesfarmers had record sales because everybody was buying their toilet paper. Guess what? Now you go to the supermarket, you can't actually buy anything because they've got no supply chain. So it's a little bit of a different story. Now, although we're not going to see that impact next week, at some point in the near future, we're going to see a drop in their revenue because, quite frankly, they haven't been able to sell, right, Thomas? Like, the shelves are empty. So, until a lot of these problems get sorted out, and it's everywhere. It's not just Melbourne. It's in Sydney. It's in Brisbane. I see that there's some headwind that maybe not being completely factored in yet. So whether that gets overridden by dividends and the big players reporting well, I guess we'll see. But if I had a bias, I would probably lean towards the 7,200 before a 7,600.
Yep. So I think I probably agree with the 7,200 concept. Do you want to put in a prediction for the end of the year? What do you think it's going to do? So we've got price right here. Where do you think our favorite, well, not our favorite index, but our Australian index, maybe it is our favorite, is going to do? What do you think for the end of the year, Ty? Putting you on the spot. I've got my concept in. Do you think we're going to see double-digit gains or single-digit gains?
You're not going to see double-digit gains at all. I think what you're going to see at some point throughout 2022 is the 6 at the start. But I think we're going to end in the 7s. And I think we're going to end somewhere between 7,200 and 7,400 because I actually think this is fair value for the market. I think the market, given where we're at, somewhere between 72 and 74 is probably the right price for it. And I'm happy about that because I don't think that's a bad thing. A year of consolidation in the mid-7s is actually a very, very good thing for the ASX 200 because that really gives us the opportunity to really launch off that in the coming years and potentially push up to that 8,000, which everybody's wanting it to go. But I get the feeling, though, that we might see some sell-off at some point this year, just simply because there's just so much going on that I'm not completely sure is being factored into the market. And we may, and I really hope we do get a 6,800 or a 6,900 on it because I think that's going to give us extraordinary trading opportunities because short of something we can't foresee, there's no real reason for a massive sell-off. And I think a 6,900 or a 6,800 would actually be a healthy sell-off. But I think it's going to finish somewhere in the vicinity of where it's at. And we might see a high, maybe a test of 76, but I also think we're going to probably see a 68.
All right. I'm going to go a little greedier. I agree, pull back through the year, traders year. big pullback probably occurs into the sixes, probably a 68, 67 for me. But I think we actually end all-time highs for the ASX. And the only reason why is I have a feeling that the commodities cycle of iron ore will continue to be quite robust. And we are a big portion of that. Oil also could get out of control this year, Ty. And if it gets past that 100, even though OPEC may smash it down, because of this inflation play also hitting the finances, I feel like there's a little bit more runway. But look, time's going to tell. It depends how many interest rates they get in. But it's all going to be about materials for this sector, I feel. If we can get the materials and commodities up and continue to run it, that's my feeling. Not too much highs. Most people, I think, are going about a 6 to 7% for the year. And then that basically equates to a 10% with div, because we're so far behind the US market. But the US market could be a totally different one. It's not going to put on much. I'm thinking 15, 16 vibes here. Like
and one thing I will say about the ASX, although we've got a circus routine running through the country at the moment, I would rather be where our market is in comparison to where the US is, because I think we've got a more easily tradable market where I think the downside is less. And although and we've probably got a little bit of upside as well, because we haven't really seen those highs that really match what the S&P 500 has done. The S&P 500 terrifies me, to be honest, because a pullback could go a lot further than you think, and it would still be considered healthy. Whereas our market, if we go back to say 6,800, most people would be saying that's just an awesome reload zone, and it is. So realistically, imagine if the US market went back to 3,800, like people will be panic selling. And
for sure. People couldn't handle it.
People will just be loading up. So I think that where we're at as an indice is probably a really good place, because I think we've got upside potential, downside potential, and for those who are playing the options play, you've got some bloody good sideways movement that's like an income maker's dream. So we're probably talking from a selfish standpoint, in a sense that this is what we want the market to do, because if it does that, we're going to make a great deal of money for us and our clients, and obviously people in the room who are trading options. But even if it doesn't do that, there are contingencies in place. But I think the basis of what we're going to see in 2022 is no real. I know the Omicron breakout could potentially fix the COVID situation, but in saying that, we don't really know. The variant came out of nowhere, and I think there's still a lot of uncertainty. We'd like to know. We're hoping that people who are far more knowledgeable than us actually have control of what's going on. But the reality is, next week we could get a variant that is as easily spreadable as the Omicron and just as deadly as Delta. And if we get that, look out. Or we might get a more mild one. Variants come from nowhere. We don't know where they're going to come from, and uncertainty scares the market. And I think that's why we're probably going to end up as a bit of a status quo, really. But hopefully we get that movement of 300 or 400 points either side to give us some trading range.
So this is the difference. 35% still up on US 500 from previous peak to now, whereas 1.95% up from previous peak to now after the pandemic. So it's a big, big disparity there between the two markets. So ASX 72, current 200 is support, and it all correlates really back to this US 500 index, and that is the weekly 20. We talk about this all the time. Weekly 20 gets broken this week, Ty. I believe it's on, and let's go downtown, because it's a strong signal. And we can't reiterate, we don't see it often, but when it occurs, Tyron and I, we pack the bags up and we get ready for the old 50, don't we, Ty? And that's usually our go-to strategy for the last decade.
And it works. The reason why we do that is because it works. And especially on the bigger time frame. That's why we always pay attention. I mean, it is really, really hard to see this, going to 5,000 before it goes to 4,400, to be honest. But, it's not that it can't do it, but, in reality, the signs are there for me that the market's starting to weaken. You can see the candles are starting to turn over. If we get that break below the 20, it's all about the break. I mean, if price proves us wrong, well, so good. We haven't lost anything. But, to me, the signs are there that we've got to be on high alert. High alert's probably what you really want to be, probably putting at the forefront of your mind. If you are long with caution.
Yeah, I think this is the worst we've seen it. I repeat, this is the worst technical we have seen on the market since pretty much since the pandemic, I think, Ty.
Mm.
Yeah, man, we haven't seen a worse technical. This is the weakest it's been. This is the first time we're actually getting a proper, maybe here, because that was uncharted. That was pretty weak. And admittedly, we did have a bearish case scenario here where we were thinking it was going to come down a little bit further.
Yeah.
And then what happened was we ended up getting that breach of up here and we instantly switched to bullish. You can go check out what we were talking about. We had to go bullish. But yeah, this was bad. And this is a very similar. This looks like it's kind of rolling over a bit here.
It looks like it's rolling over.
I am bearish in sentiment here. But again, the market will teach us the way. And that's going to be.
And again, exactly. When the market's leading the way, then we've got nothing to really fear. But to me, if you want to ask, are we trading this? We are not personally trading this until it gives us a very clear signal. But the bias is definitely a little bit short for a little while. So, hopefully that gives us, we can't say it's just going to go down, but it looks like it. And you guys can see that, right? You can see what we're seeing. If you can't, mention it in the room, because to us, it's plainly obvious what the candles are looking like they're doing. So if you're not understanding what we're talking about, definitely, sing out, because, it looks pretty clear cut to us for sure. We will have a look at AGL. Let's look at AGL if we can, Thomas.
We will look at just want to switch these last couple of indices because this is all important. This is another one I want to bring up just quickly here. The weakness that's come through in the Nasdaq in tech, the 2050 cross at 16,000, and the fact that it's actually shorting off. Technology will have a tough time of it. Remember, guys, it is seasonally weak. I want to just reiterate that to the private community here. Seasonal weakness, Jan, Feb, March. Negative 1.4% weakness. April, May. Hey, totally different scenario. I think this is a sell the rumor, buy the fact, Ty, with interest rate hikes. That's what it feels like to me. And in the private community, if you bring it up, Stephen actually shared something before. Let me just see if I can grab it. Here it is. And I want to open this for everybody here. This is actually the returns after the first rate hike of the Fed. So you'll notice that first rate hikes tend to have a bad 3-month period and then tend to be positively correlated. Those sideways, because you can see here this percentage remains the same for the next 6 to 12 months. This is why we call it a trader's year. As soon as we knew they were rate hiking, which inevitably was going to happen, you get weakness. But I think there's a little difference between this one and last time. It's the sell the rumor is happening right now, Ty. Before their fact. And then the fact is going to be different and everyone's not going to understand it. They're all going to be like, oh, why? I can't buy it. They've just raised rates. The market makes no sense. The common statement. What do you feel? Do you reckon that's what they're going to be doing?
Yeah, I think there's a really good chance that's going to happen. And that's why I'm excited about a really good trading year. I think we're going to get some really, really good opportunities because we'll be doing things that everybody else isn't.
I think so. And this is another one that comes in here from Gary. There's plenty of good questions coming in here. Time to get those put spreads in. Well, Gary brings up a great point there. There is a way of trading to the negative side that is much safer. What have we got to be concerned about as swing traders here, Ty, if it starts to short through the rip rallies, These big bull kind of dead cat bounce style things that occur. They stop you, they destroy you. We could easily see here rally back up to 15,540. This is going to be a zone to watch today in the trade. And if it does get up here, it might sell off from that point, make a new low. Be careful out there. It is easier to be long than short in the markets. And one of our favorite ways of shorting is actually the put spread, isn't it?
It is, yeah, it is, and it probably actually it leads to a question that Zodiac just asked. Actually, if the SP500 does close below the 20 EMA, what do you do? Do you actually short the index or focus on some particular stocks or both? Look, it's a good question, but it really comes down to your comfort level and what you like to trade. Really, look, we love trading the indices because the indices have high liquidity in their options. There's no question about that. You get very good income on your. You can do bear call spreads or bear put spreads, whatever you want, really. If you're looking to play the downside, just whichever one's paying better. And but in saying that though, if there are stocks that you like to watch that react as most do with the index, but they actually sell off more aggressively, for instance, Zodiac. So say, for instance, the index comes down 10 or 15%, reaches a support zone, but your favorite stock, I don't know, Walmart goes down 5 or 6% more, sometimes it's actually a better play to actually play the stock because it's sold off more aggressively than the index, but no doubt it will more than likely rise at the same rate, if not more. So you're going to have a better bang for your buck. So probably the answer is to do both. So, play the index, no question, with, however you want to, whether you want to do the CFD or whether you want to use options, but also keep a very close eye on the stocks, your favorite stocks that you like, that if they've actually had a bigger reaction than the index, then sometimes they are actually the more lucrative because they've got more potential upside just simply because they're going to follow what the index does if they're very closely correlated to it, which, a lot of the big ones obviously are. So, yeah, definitely keep an eye on both at that point and just see which ones are actually tracking better. A bit like identifying, it's very similar in a way where you say, okay, the dollar index is going up, all the dollar-based pairs are going up. Are you going to trade every single one of them? No. What you're going to do is go through all of the dollar-based pairs and look at the ones that have got the best technical setups. Which ones have got the most potential to make you the most amount of money on a move that favors the dollar strength? And then bang, off you go. So it's a very similar in that regard.
Another one just before AGL, Ty, IWM, just wanted to bring up small caps are starting to fall over as well. This is a huge channel. Another breach underneath this, a negative sign, and showing the sign of further weakness in the market. And we could really see a bit of a sell-off across asset classes here. So be warned, continue to watch these levels, weekly 20, weekly 20, weekly 20. I spam that because why not?
Just like we warned you before Christmas that if the market hits the 4,800 on the SP500, start to sell it. We're giving you another warning now. Be very, very mindful that this is a very important zone. And if we see a bit more weakness here, you're going to see, potentially a bit of a party. And like I said, don't be afraid. Don't be afraid. It's good for the market.
No, we are not negative. We are not negative on a crash to end all crashes right now. We see this as an opportunity, guys. And these are the types of opportunities where if you let the FUD, if you let the scary news, the CPI, the inflation, most big money managers that we speak to on, regular occurrence, we all have the same opinion. The inflation could get knocked out by shipping performance, shipping changing, and on top of that, a couple of rate hikes that end up putting a massive dampener on people's FOMO attitude right now. So we'll move over to AGL, Ty. We like what we've seen so far. I'm just going
to say one thing very, very quickly that I heard on the news tonight, which actually concerns me and tells me, and I'm not even that political, but by golly, we've got a clown leading our country. You know what he said tonight? You know what his answer to a question?
I don't get into it.
Was they said to him, how are we going to solve the question of, oh my God, there's not enough rat tests to give staff to be able to get tested and get back to work, to start the supply chains going and actually get business and the economy kicking again. Do you know what he said, Thomas? Let me tell you what he said. I think we're going to change the visa requirements to start bringing in people from overseas really, really quickly. Let's start bringing in those students, start giving them the part-time jobs so they can fill in for the people that haven't got their rat tests. Yeah. That's his answer. Open up the international tap, bring in more people so we've got more workers because we haven't got enough rat tests to actually get the people who actually have got the jobs to get back into work to fix our supply chains. So how about that?
That's a good fix. I like it. All right, back to AGL. Come on, man. All right, let's get over here. What are our thoughts here? Well, it's had a good rip rally so far. Now, AGL actually could go on a bit of a tear. And there are a few reasons. Let's just quickly look here at the weekly 20. And the weekly 20 is a big deal. I mean, it has breached it. And this was our second stage of recovery. We talked about it here for very valid reasons. Funnily enough, when that big transaction happened between the two funds, that ended up being almost the print low. So do we expect further strength to 8? What are your thoughts, Ty? I like 8, but I see weakness there.
Look, like we said, when the thing was down on its knees and looking like it was about to die, when a stock is trading well below its asset value, and it starts to show signs that it wants to reverse on the smaller time frames, there's a really, really good chance it's going to get somewhere close to its asset value, which I still believe is, I think, closer to 10 than it is 8. Are we going to find a little bit of resistance at 8? Probably. But is it probably going to get to 10? That's where its asset value is. I mean, at the end of the day, that's what it's actually truly worth. If somebody was to come in and buy AGL, they're going to have to pay its actual value, not what the stock price is, right? So I think it gave us all the signs. I know a lot of people have done really well on this. I've got a lot of emails. People are very, very happy about AGL. You know, it's done a pretty good job so far, right? Like it's already got up about $1. You know, it's over $2 above its absolute low.
Yeah.
But you can see that the lightning bolt finally happened. Look at the cross. You've got to look at the crosses, and when they happen on the key time frames, we trade it like everything else we look at. It's exactly like a currency, exactly like gold, exactly like whatever it is that we trade. When you get the technicals, when you get the price reversals at very, very key levels, and you know, from a fundamental standpoint, its asset value is well above where it's still currently trading. This is what happens. AGL. We're going to be very, very mindful of that. It's different if we're talking about, a speculative stock that hasn't any basis for being at a certain price. This has got a basis for being at a certain price. If we get a close there, I think Tom's right. Probably $8 is probably going to see it maybe take a bit of a halt. But yeah, at some point, probably in the near future, we could certainly see the strength continue on here and probably push up somewhere to its better value. But I think it's been a really good trade, and done to all of those who believed in our electricity producer, Thomas. Yes.
It's a pretty crap stock. I got to say, one thing I don't like about it. Well, it may make money. It may make money from us, but they have the worst. I mean, seriously, stupid ass ideas. You want to talk about splitting the business? AGL smart, or I don't know. It was dumb. As soon as I heard that announcement, I went, "Oh no, here we go. We're going to get smoked." In terms of this stock is going to keep going. And then it did, and now it's back. So AGL, we're thinking 8. Long leg doji up here at the peak, looking for a breach past that to get us to the $8 target. And yeah, it's still okay. It's better if you're just in it. Obviously, you wouldn't be too concerned. Now, we got some questions about BHP. Now, this was the stonker trade. In my opinion, the better trade. Not as a raw percentage, but just a seriously solid setup. Like great volume, great seasonality, great big accumulation. I love this trade very much. Yeah. I'm not done with it, but it is at the next level.
It's at a problematic level now, but I think both Thomas and I we have alternating sessions on the AusBiz channel for the Australian. I'm not sure even my channels. I'm one of the 9 channels, and I think we blew up AusBiz when we suggested that BHP was going to launch off that double bottom, and and pretty much. I think we were getting probably a little bit of skepticism as to really, because back then it was at 34, 35, but it was such an obvious place to start buying this up. It was just very, very obvious what it was probably going to do in the first instance. And the targets are very, very straightforward. We've mentioned that many times before. BHP is a very, very technical trade, very, very technical. And a lot of money goes behind it. It's an option trader's dream. Levels stand up. Look, occasionally it has very, very big moves that can be a little bit unprecedented, but this is not an unprecedented move. Anyone who's surprised that it's at 46.50 has not been watching our webinars.
And certainly not when you're doing the iron ore analysis next to it with it under around $100 a ton. I mean, just unbelievable drop. 120 a ton down. Come on.
Seriously.
Yeah. 46.54. Are we at resistance? I think yes, with a potential down to 44 again, and another nice trade pick up to 50 would be my target here for the first quarter to second quarter of this year. Your thoughts, Ty?
Yeah, I think it's very fair. Yeah, I think it could definitely touch the 50 again in a hurry. When I think it's very toppy above 50, right? Make no mistake, when it starts getting above 50, it starts to get toppy. No question about that. I'm not comfortable above 50. But hovering anywhere between the 44 and 50, I think is probably its right zone for now, given where we're at, from an economic standpoint. And I think that's a good level for it. And it's still a good trading even in that zone. If you're going to trade it with options, this is the sort of place where you start to put those, sideways market spreads in, iron condors, even just the standard condors, if you like, to really trap that price in between those zones. And the premium's always quite high on BHP because it's such a big volume trader. You always get pretty reasonable premiums on it too. So you can get those good spreads in or good condors in. You want to give it a bit of room. You don't want to be a bit cute. I know Stephen's out there already starting to draw up his butterflies. I can see it already. He's got his butterflies out. You don't want to be too cute on it because BHP can move $1.50 really, really fast. And, you know, if you get a bit cute with a butterfly spread, you got to be a lot more accurate than you are with a condor, of course. So I suggest giving it a bit more room and probably giving it more time to offset the premium. So instead of going for a 2-week potential, maybe go 4, 6, 8 weeks out and go condor. And I think you're going to get better results because you're able to give it a bit more room.
So yeah,
you know who you are, Stephen. There he is.
Poor Stephen. He always cups it from us a little bit there. Look, I want to just quickly talk about a bit of an elephant in the room. And this is the not all stocks are equal and not all stocks have come back to the great force that they were. So this is Flight Centre, Ty. And I actually quite like this little zone I've got set up here. I don't think all markets are going to be like, there's going to be some of these travel sectors. And again, I feel like Omicron is going to be a net positive for this sector in the first quarter, second quarter, third quarter of this year. You know, you could agree or disagree with me. But from a pure price action based standpoint, we have some strong rejections off 1876. We've got reasoning why they could actually move up. We've obviously got the ability for this stock to actually do better. It's done really well off rip rallies before. And I'm just thinking around this level. What do you think if we get a breach above this level, considering the current trend is held up, considering it's held a strength here, it's been relatively technical, and we've got multiple rejections off this exact area so far weekly?
Yeah, I think it plays the technical game really, really well if it does that. I think if we get that close above there, I think the market has spoken, so to speak. And yeah, you're right. I think that inverse head and shoulders kicks in, and then it starts to push to those highs again above 20. I like it. Yeah, I think it needs to do it. You know, speaking of flights, I might take this quick opportunity because I know we're going to run out of time soon. The conference is less than 8 weeks away, guys. We are so excited, absolutely pumped. This weekend, we're going to release an email with all of the activities that are happening on the Monday and the Tuesday. So you got to book in fast for those. Thomas has already taken up half the fishing spots. There's diving, there's golf, there's all sorts of crazy stuff. All of you Australians out there, I expect to see you there. Jessica, we're going to do the ASX for you. You've got to get there. All of you Australians have got to get there. Stephen, you're going to be there. We cannot wait to meet everybody. It's going to be such an exciting event. Flights are extraordinarily cheap at the moment. I had a look. We had to make some bookings the other day because we're booked. We're going. That's it. Even if Thomas has to drive us, but flights are really, really cheap at the moment. So if you are looking at booking and going to the conference and you've booked for the conference and you haven't booked your flights, it's a really good time to probably get in there because they're basically, you can get there they're nearly paying you to fly. So from anywhere in Australia, I think except Perth, to Cairns. So, and Cairns is not a hot zone anyway. So it's very, very far removed from the Gold Coast, as everybody in Australia knows. So we are so looking forward to it. Look out for that email though for the people who have already booked or for people who are thinking about booking. The events email is going to come out this weekend, so you can actually start putting your interest in. But yeah, Thomas and I are going to be hanging out on the Monday and the Tuesday with everybody, and there's going to be and the guest speakers are hanging around as well. So it's going to be an awesome time to learn and actually meet the people that you basically see here every single day.
I believe Amanda's I have to get a fish for Amanda. Yeah, I put her in already. I think I have to get her a red emperor or something, if I remember rightly, when we go fishing.
Absolutely. Yeah, Amanda, and you know what, Amanda, I'm so sorry I didn't get to call you today. I know I said I was going to tomorrow. Okay, I will call you tomorrow. Amanda, for all of you who don't know, is our conference coordinator up at Cairns. So she's taking care of all of these fun events that we're talking about. So making sure you say g'day if you see her in the rooms.
So let's talk about the elephant in the room that's going to also be here. We'll just do a quick crypto section here. So BTC. Will the horrid head and shoulders play out? Now, Ty, I sold something. You'll laugh at this one. I sold something on the Facebook marketplace, okay? And the guy, he's messaging me. And I'm like, what the hell? He's got that ape picture, this NFT Bay-C ape. So he comes to the house and I'm like, do you own the Bay-C ape? He's like, yeah. He goes, look at this. He owns this NFT, man. Do you know how much this Bay-C ape is worth?
How much?
$250,000 US.
Oh
the picture of the ape type. Now he has this. I'm like, you gonna sell it, brother? And he's like, yeah. I think I'm gonna sell it this year. He goes, soon. I'm gonna cash in. He goes, my ape is good, but I think I need $250,000. I said, I think you definitely need a quarter. Oh my goodness, he was loving it. So he had, that's the first person I've met in real life that owns a $250,000 NFT. So there you go.
That is amazing. That's amazing.
All off the Facebook Marketplace story. So look, Head and Shoulders, definitely a real thing here on BTC. We know the power of 40K. We know the importance of it. The problem with BTC and crypto right now is its sentiment is getting muddled up in the stock market. So someone mentioned this, Crago said it before. Yeah, the big deal here is that while there are some little rally rips, there's no follow through. Like we said in today's live stream, we want the damn follow. Where the hell is the follow through? There's nothing going on here. This sucks. It doesn't look strong right now. We need follow through. And I don't know. I'm probably not really convinced there's a rally really going to go on until we get through 46. If we get through 46, okay, you convinced me. Let's go. And 50 is next in the bag and all of that. But the problem is we've been sitting here now for weeks and weeks and weeks. It feels like we're struggling around this 40 zone and 46 zone before that. And it just keeps weakening. And that Head and Shoulders is the real deal. This support resistance is a big point. And as we always say in the room, we need to be looking at BTC shorts. So we want to be knowing what's going on with the shorts. They continue to rise, which shows us that the big Wall Street style positioners, but more importantly, the whalers, the whales are coming in and they're starting to add to their short positions. So it's going to be an interesting couple of days here. If it gets through 40K, I don't know where crypto's going. Could be all the way back to 30. But it's looking ominous here, Ty. And Ethereum's the same. It's got to hold these support zones. And if it doesn't, not looking good.
Yeah, no,
frankly, it doesn't look good.
100% agree. I've got a couple of people are asking about, they haven't received a conference email, amazingly. So I'm going to quickly address that. Do you want to just answer Robbie's question about can they make millions seriously?
You want me to answer it? Okay, so Robbie, there's two.
We'll answer it together. I'll let Thomas start, but yeah.
All right. So I think there's two things about YouTube people saying they've made $10 million. It's super possible to make $10 million if you also have a really solid income. Yeah. So there's a difference between investors and traders. A lot of them have been buying huge levels of Tesla as well. So when you've been buying Tesla and you end up being correct, you can make 5, 6, 7, 800%. You have like $1 million balance. Obviously 10 million, super possible there from an investment standpoint. Just like it's super possible if you go buy a couple of houses and they go up 30%. Traders can certainly make it. But the key there is that when you're going through, you've got to be able to get the stuff right from the correct get-go. And that is compounding. We might be able to get Shogun Ulrich on the show over the next couple of weeks as well. We might even try to get him on the invite, Ty, because Ulrich's someone that's made $600,000 the wrong way, which is, to the moon, done it in trading, lost a bunch of it, which is always the way because you've done it the wrong way, and then rebuilt himself into creating it the right way, trading correctly, being able to understand the market from, I would say, a very, very good standpoint. So we appreciate his community feedback as well. But he's a good example of someone that's turning it around and will most likely get to the $1 million, multi-million dollar mark. You don't always see it with everybody, but it's very possible. Compounding's the key, and understanding that it is not a race to the finish. It is a marathon and it takes time. And you always hear about these guys making millions. Come back to us in 2 years and tell me whether they've still got the millions. That's what I'd say. Ty, your thoughts?
Yeah. What you don't want to be doing is trying to get rich the wrong way. And people make that mistake all the time. They think they're going to make millions and they believe the hype, right? Look, at the end of the day, it depends on what you start with. Like Thomas said, if you've got millions of dollars already in your investing, well, of course, you're going to make millions of dollars if you do it properly. If you're starting off a $10,000 account and you expect to make millions, you got a very, very long road ahead of you, even with compounding. So it comes down to common sense, right? We're not about making hundreds and hundreds of % a year. Okay. Anybody who comes to our webinars knows this. It's all about making steady, solid returns over time, compounding them to let your account build. And as your confidence builds, obviously your account will get bigger and bigger. That's what it's really about. price action alone, can you do it? Any discipline that we talk about that you master can do it. If you just do support and resistance and don't even use price action, you can get the same result. If you turn into a head and shoulders extraordinaire, if you turn into a trend moving strategy extraordinaire, you're going to get excellent results. Price action is just another way. If you master it, yes, of course, you're going to make more money and you're going to make consistent gains. But if you combine everything that we talk about, you're going to make it more on a more consistent level. So it's not just about price action, even though it's a really important component. It's about bringing it all together. We're not going to sit here and tell you you're going to make $100,000 into $10 million. If you do that, you've probably done it the wrong way. I'm not going to lie. Correct, Thomas? You're not going to turn $100,000 into 10 million in a couple of years, right? That's not realistic.
Yeah.
If you've done that, you've taken extraordinary risk. If you're using the correct risk that we always talk about, can you make 20, 30, 50% gains in a year on year? Absolutely. It depends on how much you trade. But are you going to make hundreds of percent a year using the correct methods? Extraordinarily unlikely. Okay, so it's all relative to the balance that you're starting with. And your discipline. If you take extraordinary risk, you can do it.
Yeah.
I'm not going to say you can't. People have done it, but do those same people come out on YouTube and say, "Oh my God, I made 10 million, but I've actually lost 15"?
Well, they stop talking about it probably after a while.
Exactly.
So yeah, it can be tough out there, and I think that's something that you've got to really consider. All right, Ty. Well, I think that brings us to the end. As you mentioned, there'll be a Australia Day email going out next week with some stuff on it. If you are interested in taking your trading to the next level as well throughout 2022, remember we do have a few spots open for the February private mentoring group. A lot of you guys have already started doing it. You seem to be enjoying it greatly. I think it's a game changer. It will totally change the way you look at markets in broad terms. And it's probably a culmination, really. Well, it is the culmination of at least my 12 years of work in the market and Tyrone's long-term look at the market as well. We've put it together into what is basically the final form of our courses. And I think it's very different from what we necessarily talk about all the time. And it's about being patient. But when you find key levels, boy, oh boy, can you take advantage of them. So from myself anyway, I'd just like to say welcome back to 2022. We look forward to seeing you in the Discord community and all the big things we've got planned. And yeah, Tyrone, what do you think?
I think we're in for an absolute ripper. We want to obviously thank everybody for attending tonight. We're going to be on Wednesdays from here on end, of course, so we don't miss Wednesdays. Australia Day is no excuse not to do a webinar, as you all know. Now, one thing, tomorrow, we're going to do the Q&A on Friday this week, actually. Okay, so Friday Q&A at 9 p.m, same time as this webinar is what time it's going to be. It's going to be open to the public, seeing as though it's the first one for the year. I know a few people have been asking about it, but it's going to be on Friday this week. Okay, at the end of the week, we're trialing a couple of different days. We are going to shuffle some things around. We've got a lot of exciting things happening. The room is going next level again. We've got some very, very exciting things coming in late February and early March, which we're going to bring to your attention very soon. But yeah, I look forward to seeing you all at Friday Wrap and Friday Q&A at 9 p.m. You'll get the links in the Discord room if you haven't already. Thank you so much for being patient with us and getting us on the board again. Very happy to be here, and we look forward to seeing you all in the Discord room.
All right, guys. Thank you so much. Remember to smash that like button on the way out, and we'll see you next week or in the rooms. Bye for now.